Hello?
Sean?
Hi, this is Sean. Who's speaking?
Dave Cotter, Integrity Capital. I was given your name from Joe, who had just mentioned that you're looking to, I guess, buy a retail center. Is that?
Yeah. Hi, Dave. Thanks for calling.
Yeah, absolutely. Thanks for taking the time. I just wanted to spend a little bit of time just going through the deal with you, if now is a good time. Is that okay?
Yeah, would love to chat.
Okay, great. Well, just before I dive in, Sean, I just want to get some of your information. I noticed when I looked on your profile, I just want to make sure. So it's Sean's, am I saying it right? Is it Spire?
It's Spear.
Spear. Okay, so got it. SPIER. And then Uptown Capital.
Correct.
I obviously have your phone number. And then spire@uptowncapital.com for the email address. And you are at 2345 East Royal Red Road in Scottsdale, 85233. Does that sound correct?
That's correct.
Awesome. So yeah, tell me kind of what's going on.
Yeah, so we're actually looking for a lending partner to help us finance a shopping center here in Phoenix.
Okay. How much do you know how much the acquisition is for?
Yeah, so we just went under contract for $10 million.
Nice. Congrats.
Thank you.
What's the loan to value that you were expecting?
Yeah, so I've done this in the past. We really prefer max leverage, whatever that can be. I'm not sure what the current max leverage options are.
Okay. Yeah, okay, so that's great. So just so you know, with retail, we're probably seeing anywhere from about 65 to 70% loan to value, if that's going to be sufficient.
Yeah, I'd prefer that, keeping it within that 65% at the bottom would be great. 70 would be preferred.
Okay, great. How much cash do you have available right now?
Well, we have 3.2 million in 1031 exchange.
Okay.
And then I do have some liquidity as well, but we prefer to kind of keep it as close to that 1031 as possible.
Got it. Okay, perfect. Yeah, thank you for letting me know on that. So just, for the audience listening right now, a couple of things. Just it's important to note that there's many times that the client has no idea of the purchase price, okay, or how much it's going to cost them to acquire the property of this size. And so it'll be really important that you set expectations from the beginning to be sure that they can verify their equity. Otherwise, this can be problematic if they don't have reasonable expectations with the client. So we will continue onto the asset property section. So what is the property, sort of the condition of the property then?
Yeah, so the property is in great condition. It was built in 1984, and there's actually a 99-cent store anchor, which is really what drew me to the property.
Great. Okay. And what's your specific experience in owning retail centers?
So my family and I have owned and managed several strip centers in the past. We just recently sold one. That's actually how we have our 1031 funds. So we were just trying to, grow that opportunity into something bigger.
Awesome. And can you tell me how many years of experience you've been doing it?
So we've been doing it about 7 years now.
Great. It's awesome. How much ownership will you have when you buy the property?
So just me and my wife. So we're going to be 100% owners together.
Great. Thank you. And so do you have any a day job, or are you just doing real estate investing full time?
So I'm actually a senior vice president for a technology company here in town, and we have multiple branches in Northern California as well. So I'm local, but also I do travel for work.
That's terrific. And how long have you been with them?
So I've been there for about 8 years now.
That's great. And what's your if you don't mind me asking, how much do you make a year?
I earn about 500,000 annually, and my wife does not work, so she's really in charge of a lot of the property management obligations that we have on these investments. So I'm the one with the W-2 steady income.
That's great. And how much debt do you and your wife have presently, personally, and just between all the stuff you own?
Yeah, so I have a mortgage on my home.
Okay.
We do have a boat, a cabin, and an RV. We do pay off our credit cards monthly, um, but those are the key monthly payments we make is on the harder assets that we own.
Do you know about just roughly how much like in debt payments you're making on a monthly basis by chance?
Yeah, I want to say it's about $20,000
Okay,
a month.
got it. That's great. Thank you. Just so you know, I'll need you to complete a personal financial statement, just, giving me the debts and the monthly payments and things like that. So if you can just lay that out, that'd be great.
Perfect, no problem.
Okay, so we'll just pause there, speaking back to you, listener. So a lot of times the client will not know this stuff off the top of their head. So you will need to request the appropriate documents. And remember to quickly run some cash flow numbers based on the potential new loan. If you recollect, you will do this by running a debt payment on an amortization calculator of about 70% of the total cost. If they do this conventionally, you'll use a market rate and get the annual payment. From here, you're going to go ahead and calculate the primary debt service coverage ratio to again see if they exceed 1.20. If they do not, then this is a great time to discuss this. This might be a challenge, and also to collect tax returns, financial statements, etc. This way, you can really dive in to see if you can help or if they're not. So we'll now proceed with the urgency section of this application. Are you under contract right now?
Yeah, so we just actually went under contract yesterday, and we do have a 30-day due diligence and 60-day closing timeline.
Great. Have you spoken to any other lenders?
We currently do bank with Chase and have asked them to provide terms as well.
Okay. I appreciate you letting me know and your transparency on that. We're always happy to help. If we can come close or beat Chase, would you be willing to work with us, or what's kind of your philosophy on that?
Absolutely. I'm on a tight timeline, so I need to get this sorted out sooner rather than later.
Great. So that's terrific. Just again, speaking back to listener. So remember that you're looking for the following areas of the client. Okay. So these are the things to focus on. Are they under contract to purchase something? This is great form of motivation, right? For them to hit deadlines. Do they have a contract out to the seller to sign to buy the property? It's a sign they're serious, looking to get a deal done. Do they just sell a property and they're in a 1031 exchange? This gives a serious sense of urgency because their deadlines they now have to hit. Are they not under contract? Again, this shows less urgency for the client. Are they refinancing and have a balloon in the next 6 months? This can give them a serious time crunch and a sense of urgency. And if they're refinancing and there is a major discrepancy in the interest rate versus what they get in the market, this can create high motivation. If they're refinancing, they don't have any need for cash, either personally or their business, or if there is a major cash need, I should say, then that can create urgency. If they are refinancing and there is no need for it other than they'd like to, that's pretty low motivation. And if you're dealing with development, you're talking about timelines, high cash need. So those are the things that are going to create urgency. And that's what we're trying to accomplish, to really identify, is the urgency there or not? So we're going to go back to the application. Just tell me, what's your credit like? Meaning that have you ever had any bankruptcies, foreclosures, short sales, criminal activity, late pays, or even any lawsuits at all?
No, thankfully nothing.
Great job. What do you estimate? Do you have any estimate on like credit score or what that might be?
Oh, it has to be 100.
Okay, great. Thank you. Speaking back to you, listener. So if a client has any credit issues, the remedy is going to have them write a one-page letter explaining what happened, when it happened, why it happened, and why it's not going to happen again. And furthermore, you'll need them to give verifying information that supports the claims, legal paperwork and documents to support the story. With SBA, they need to jump through some hoops to get it approved by going through Washington, D.C. This could take weeks to get approvals. Obviously, on this particular deal we're discussing, It's not going to be SBA because it's income producing. So we're going to go back now and talk about credibility with the client. So would you mind sharing your background in the space so that I can substantiate the expertise of your business?
Yeah, so interestingly, actually, my wife was a property manager in her past life. So we decided to own and manage our own retail properties after she gained about a decade of experience.
Hmm.
It's been a great way to create some, additional income for our family and just do something a little unique and different.
Yeah, that's great. Can you get me a copy of your resume by chance and put everything into it that you have accomplished by time periods? We're trying to get as specific as we can around what your experience is as it pertains to this.
Yeah, absolutely. Would my work experience also help, or do you want to be more just directed towards this?
Yeah, I would say it's helpful to have a little snapshot, but I'd focus more on the asset itself because that's what the lender is going to look for, is like how much experience you have in the retail center experience.
Excellent. Will do.
Awesome. Okay, going back to listener. So when you hear credibility, I want you to think about if someone's competency level, okay? Is somebody competent, that they have the proper skills to pull something off? In the case of lending, you want to see that someone has experience or equivalent experience to feel confident. There are a few factors that can help offset the fact that someone has no direct experience in the industry you are lending to, which are someone who has very strong financial statement and liquidity, someone has partnered with or hired someone who does have experience, someone has like kind experience in a similar industry that can be transferable. And you'll want to ask questions to determine whether or not this person has the appropriate competency to borrow the money. And just we're going to go back now to this idea of compensation when we're talking to the client. So are you familiar at all with how we're compensated?
I'm actually not.
Okay. We are a success fee brokerage. We charge 1% of the loan amount, and that's about a minimum of $10,000 in the fee, depending on the size. We're compensated for identifying the lender, walking you through the whole process, and consulting you along the way. Our role is to best represent you to assure that you have a proactive experience. We're typically paid at closing through escrow by you, the client, and that can be built into the budget depending on what we're doing.
That seems fair. What would you say that your value proposition is?
That's really a great question. The reason people go with us is for the following reasons. We're extremely proactive, walking you through all the nuances and assuring that we can solve them. We have access to capital sources that are extremely competitive and would benefit your needs. And then we are responsive and share your best interests. And that's really the value proposition that we typically have with clients.
That makes sense.
Yeah, great. Okay, so just a couple notes back to the listener. So this can be a tougher discussion. Nobody wants to talk about money, but it's critical. Remember that you have people who will accept it. We'll have people who have no intention with working with you. You might have negative people about it. They might ignore it. And your job is to be candid, but gracious. Address it head on, because we're trying to screen through and determine if this is somebody really we're going to develop a good relationship with when all is said and done. So we're going to go back to setting appropriate expectations. So client, I think you might.
Yeah, so I'm going to need to get a rate of 4.25 at most. I've heard this is attainable right now in retail.
Totally understand this, that you want it. Just note that, we always want to be realistic about what we can, obviously, and cannot achieve. And we're always going to stretch to get you the best rate possible. And that's obviously our goal.
Great, thank you.
Again, it makes sense for you to want higher leverage. I'll need to get a signed purchase contract, rent roll, P&L on the property, and to get started. If you have an offering memorandum, that helps a ton too.
That sounds great. I'll get that to you as well as your additional items you need.
That's terrific. And thank you. Please don't forget, obviously, the personal financial information, and I need proof of the 1031 exchange. So if you can get that to me. Okay, going back to the listener. So part of your job is to set real expectations, realistic. It can be hard, but it allows us to build trust with the client and the lender. So you're going to be talking about timelines, interest rate, LTVs, et cetera, just to make sure that we're on the same page. Now we're going to go through the section we're talking about recourse with the client. So are you aware that even though this is going to be a recourse loan at 65%, are you kind of aware that they'll be signing?
Yeah, but maybe you can elaborate on that.
Yeah. So when you sign a guarantee, you're giving the lender the right to pursue you personally if your loan ever defaults. Typically, anyone that has 25% or more ownership in the business will have to sign. This includes any and all spouses unless you have a prenuptial agreement or they sign a spousal waiver document. Let's say that you default on your loan. The first course of action the lender is going to do is to work with you, obviously getting it back on track. If it doesn't work, then they'll begin pursuing legal action and foreclosing on the building or the assets. If the lender is successful in foreclosing on the assets, then they'll begin liquidation. If the proceeds from the liquidation pays off their loan, then they will not pursue you. But if there is still a balance after paying everything off with the liquidation amount, then they will pursue you personally for the loan amount that is left to be paid off. This will become a judgment deficiency and show up on your credit. Furthermore, it's important to note that unless you have a prenuptial agreement or have a waiver that your spouse will be willing to sign, that it is going to be a full recourse loan.
That makes sense.
That
Thanks
makes
for your
sense.
explanation.
Yeah, good. Just in terms of net worth, do you mind me asking, what your net worth is?
Yeah, it's right around 10 million.
Great. And how much of that is liquid?
$5 million, and that is with the 1031.
Okay, got it. And is that like literal cash, like as opposed to just like securities?
Correct. Yeah.
Okay. All right. I just want to say that's perfect. Okay. So just back to listener, you're going to want to ask about cash. Okay. Fast, because you want to see if they have what it is they need. So here's a couple of rules. If it's a small business owner, you're dealing with a bank, they're not going to give a tremendous amount to the client's net worth. If it's an investment property and you're dealing with like Fannie, Freddie, which is more apartments, then they're going to want to see someone's net worth to be equal or to the loan amount or higher. They'll also want to see probably 6 months of debt payments after the loan is closed. So liquidity really matters. If it's an investment property, you're dealing with CMBS, then they will want to see someone who has a strong net worth, but there's no hard and fast rule. They give more weighting to experience and post-funding liquidity. If it's an investment property and you're dealing with a life company, they'll want to see someone that has about 1 to 1.5 times the loan amount. And they're also focused on the client's post-funding liquidity. If you're dealing with a construction loan for investment properties, the net worth does matter. More importantly, it's liquidity. They'll want to see probably around 10%, 5 at the minimum of the loan amount. And finally, if you're dealing with a hard money lender or bridge lender, they're really not going to be as concerned with your net worth, but more the asset itself. So we're going to continue on just talking about the value of the collateral. So what do you think the property's worth?
The property is probably worth the asking price of 10 million. We also did ask our broker to pull comps on the property as well.
That's great. Yeah, it's really important we understand in advance what we think it's going to be worth for sure.
Mm-hmm.
So back to you, notes on this, listener. So the value of the collateral is something that really is critical to the viability of the transaction coming to fruition. Someone could possibly be buying something for a very specified price, and yet the appraisal comes in lower than the price. It's also possible that someone is building something and the cost exceeds the value of the property in the market. Your job is to identify a level of confidence in the property's value. Here are some steps that help you assure that you're going to flush out any and all valuation issues. If they own the property, ask them what they paid for it and any and all improvements they put in the property. Sometimes people will tell you how much they paid and then what they think it's worth a lot more in a very short period of time. This may very well likely be the case, but Lenders have a very difficult time allowing someone to have such an excessive increase in value. If someone is attempting to pull cash out above the original basis, this could pose a problem. Have they gone through the exercise of pulling comparables in the market for both the sales and rents? See what other like-kind properties they've sold will be a huge indicator of whether or not the value will come in. And finally, how far are they in the process of getting bids if it is a construction project? Having a high level of confidence with their construction numbers and then comparing that to the sales comps or other like-kind projects will be huge help. It's a very important section, and you'll really want to take time to work on to make sure that some of these are in line with what the market is. Remember that the lender is the one who usually orders a third-party appraiser, and if the wrong one is chosen, it can kill the deal. All right, we're going to go back to the phase one report. So do you know if they've done a phase one report on the facility?
I do not.
Okay. This is probably going to be required, but let's just see how the lender feels that we should proceed. So back to the listener. So just remember that this is if something has contamination, you're going to struggle with getting the loan done. So probably going to be better passing on the deal if there is an issue. But in this particular instance, they'll probably order one as part of the due diligence. So now we're going to talk about personal questions. So I'm just going to ask you, is everybody a citizen?
Yep, we're all citizens.
Great. Are you aware that your spouse will have to sign the loan documents as well?
Yep, we're both aware.
Okay, great. Have you ever defaulted on any federal debt in the past?
Nope.
Do you have a trust? And if so, will you be okay if the trust is a guarantor?
We actually do not have a trust.
Okay.
We will have the property put in an LLC.
Excellent. Are you, obviously I know this sounds kind of silly, but, I imagine you're coherent to sign the documents. We've had that happen in the past.
Yes.
Okay, good. And do you currently owe any back taxes to the IRS?
No back taxes.
Great. Thank you so much. I really appreciate it for just taking the time. I'm going to send you an email with the things that we need to collect. So like we're going to ask for personal tax returns for the last 2 to 3 years. Make sure they're the full tax return, federal and state. They're called the 1040s. If you have any business tax returns for the last 2 to 3 years, make sure again they're full tax returns. Anything or anyone that you own 20% or more in the property, we're going to have multiple companies. Profit and loss statements for all the periods historically for the property is going to be extremely important. So if you can get that from the seller and even a current year to date. I know we just passed the fiscal year, so if we can get the last couple of months as well. I'll send this to you in email, but personal financial statement filled out. If you don't have one, I'll send out our template. Feel free to walk through them. I can walk you through over the phone if you need to. A business debt schedule that is filled out for all the businesses, 20% or more again, and you can send that on our form. So I'll send that over to you here shortly. But again, thank you so much for taking the time. Look forward to working with you.
Thanks, Dave.